What's going on, lovely people? Welcome back to the channel. If you're new here, my name is Leo and I run a value investing, no BS stock analysis channel. That's a mouthful. But in this video today, we are taking a look at PayPal. Now, PayPal has been underneath some scrutiny because in their terms and conditions, they released a little blurb that says if you promote some misinformation and things that go against what they deem is against their own laws, they will charge you $2,500 USD. So that is not healthy. So if you don't know what PayPal is, PayPal has been around for quite a while. They are a payment processing site, application, however you have it. You can link your bank account, your credit card, and other financial institutions to this lovely service. However, getting charged $2,500 USD for potentially saying something that they may deem misinformation, not very becoming. And here we have it loaded in the stock research app, and if you want to learn how to get this software, folks, you can go over to leodeleo.com, and I'll talk about that in a bit. But take a look at this, folks. Here's PayPal, stock price up, whoa, and from 2021, it has been going down, down, down. Now, this little blip hasn't really been, the stock hasn't been really affected too much by the recent news of this $2,500 charge that may happen. But let's go through the numbers of PayPal, because I truly think it's a solid business. And with my software here, we're ranking this a 7 out of 10. Now, what does my software take a look at? Well, my software takes a look at the income statements, the cash flow statements, and the balance sheets. And then from those three statements, we go through 10 different categories and it ranks it out of 10. And they are doing a lot of things right. With PayPal, they have a high ROE average. So the return on equity is 15%, which is great. They have EPS growth, so their earnings per share over the last 5 years has been improving. Their debt to equity, which is super important, which tracks how much they are leveraging their capital, and that's sitting at 37%. That's a really good number, folks. We want to see this number below 50%, and that's great. The net income has been growing over the last 5 years. The free cash flow has been growing over the last 5 years. They have a decently high return on invested capital average, sitting at 11.78%. You can see that all here written out, as well as their revenue growth. Their 5-year revenue growth, it's gone up 18%. This is great. The only things where let's say they're doing wrong in this scenario is that the PE ratio is somewhat high, sitting at 55.34, where we want to find companies that are 22.5 or lower. Now, the reason we want to find those companies that have a lower PE ratio, that indicates to us as an investor that you're not so much overpaying for their earnings. Remember, if the number is 55, that means you are paying $55 for every $1 of earnings, folks. Now, 22 is a little bit more favorable than 55. Am I right? And now with our current ratio sitting at 1.23, it's not terrible, but ideally we want to find numbers 1.5 or higher. Now, our current ratio indicates to us that their assets on hand is slightly larger than their liabilities. Now, you may say, okay, Leo, that's a good thing. Why is it not getting a check mark? We want 1.5. Now, 1.5 just gives us a little bit more liquidity in the tank, because remember, a 1-to-1 ratio means we have enough assets to cover liabilities, and that's it. But that 0.5 is healthy, because now in case we have a buffer zone. And what I like to try to teach here on the channel is always trying to find companies with a decent margin of safety. Always protect yourself. Always have enough safety nets in your evaluations and in your assumptions, so that way, in case you are wrong, you have things to back you up, so you're not really riding a fine line. As well as they have slightly been diluting you, folks. So that's the last little tick with PayPal, that they've been diluting you slightly with the share dilution. Very minimal. Very minimal. But this stock price has been going down over the last little while. Now, what do I think about this whole $2,500 surcharge, which is making news everywhere? I don't like it. Now, here's the thing. I want to be able to use a software or a payment processing site. But if I have certain beliefs and I say certain things, now I have to watch what I say. And let's say what I'm saying is factual. Let's say what I'm saying is just straight facts, but they believe it's misinformation. This screams to me this is no longer a financial decision. This comes down to a more political decision, or a conversational talk. Oh, I don't think what you're saying is correct. I think you are spreading misinformation. PayPal, you, my friend, you are a payment processing site. You are designed specifically to take my money from one point to another conveniently. That is what the software and that is what the service has to provide for the customers. So when I see things like this and the fundamentals of the business are changing, I get concerned. I get concerned because I like what they do. I like how they move my money from one point to another. If I have to go purchase something, I have a PayPal account and I can put money in there to go purchase certain things. But now, if I, as a person, have opinions that directly conflicts with someone on the other side, monitoring their software, monitoring their payment structure, and what I say is disgruntling them, I have to get charged money to my account, a fine. Now I understand if you're gonna charge people for, let's say, illegal action, like, hey, you're using this software to perform something illegal, right? Then definitely charge them, right? You are breaking different terms and conditions. That makes total sense to me. But what is the company actually worth? And this is something I like to do on my channel a lot, is go to the price analysis section of my software. Now what this section here does, I can put in 3 different assumptions and price out over, let's say, over the next 10 years and discount it all back, and we can find the intrinsic value of PayPal. So what do I personally think? From a numbers perspective on PayPal, solid business. The price going down gives us a lot of opportunity to potentially get this business at a great price. Now, the news being shared, that's another thing entirely different. But let's see what we're dealing with entirely. So I'm going to fill out these lovely boxes here, and I will explain to you why I fill out these boxes the way I did. So stand by for that. And folks, if you're enjoying this video so far, hit that like button, hit the subscribe button. This software that I have in front of me, which I'll show you in just a quick second of how this price analysis section works. If you want to obtain it, head over to leodeleo.com. The link is in the description box below. There's a 7-day free trial and you can input any stock you'd like, and it's a huge research platform. It's designed to research stocks as a one-stop shop easily and efficiently. And I'm just scratching the surface of what we're covering here, folks. There's a lot of lovely features on the software and more to come, as well as special announcement to all my subscribers. If you head over to leodeleo.com and become a member, you'll get an invite to the Discord group. To become a member of the site, it's completely free, as well as the Discord server is completely free as well. I've opened up a community page to link up other investors, so then we can all talk and chat and move forward with the software as a community and talk about investing processes and much more. So make sure you take a look at that. So jumping in with the price analysis section, and I'll tell you what I did with these numbers. If you're new to the channel, I like to try to be as conservative as possible. I use these historic numbers on the side as a basis points, as a ballpark of where I should be putting my numbers in. I can put whatever numbers I want in these boxes, but ultimately I'm trying to be rational and conservative, so that way I give myself the most margin of safety as possible. So with our revenue growth, I'm seeing 18% across the board here. But for me, doing 10 years, I'm gonna do 8, 9, and 10. 10% revenue growth on the high side, 8% revenue growth on the low side. So way lower than 18%, but I want to give myself that margin of safety. Profit margin, same thing. I'm giving myself a slight haircut. I clearly see 15% and 16%. But I'm going to stick to the 10-year number and do 13 on the high side, 12 and 12.5 on the low end, to assume, let's say, they don't make as much profit. So I do that. Free cash flow margin, same principle, 21 on the low end here, or high side rather. So I did 20, 21, and 21.5. And the price to free cash flow, clearly it's at 18.74. So I'll do 18 on the high side. And ideally, we want to find numbers. Personally, I could try to stay below 20. I keep these numerics, like the PE ratio and the price to free cash flow, in the same vicinity of below 22.5. So I do 14, 16, and 18 as somewhat being a fair PE ratio, and 14, 16, and 18 for our PE ratio. And desired return, 13%. Now take a look at this. Our current price is $83.81, and the average calculation comes out to be $109.48. So this indicates to us that currently, if you pay $83 or if you pay $109, you can assume a 13% return. And if we just break this down by category, with an 8% revenue growth, paying $85, where the company is now currently $83, you can assume a 13% return. $109 with a 9% revenue growth, that'll be a 13% return, as well as our last category, 10%. If you assume a 10% revenue growth, that number is higher. Granted. So currently, PayPal, from a numerics perspective, is an undervalued business. Now I can dial in my numbers even further and go more conservative with my amounts and see how low we can actually get this company. But with those, I'm not 18, I want to do 8, please. Now with those numerics, so I'll just click calculate again, and the software is going to run through all these numbers again and spit out some different averages. Okay, so we have our first red box here, but with a 7.5%, $94 is our average calculation. It's pretty close to the 78. Like 83 is not too far off from 78. So you may be getting this company at a discount. The only thing you have to keep in mind, though, folks, is what we were talking about earlier with the whole terms and condition. How is that going to affect the user base? Are people going to shy away from using this platform? It's got me having second thoughts about it, because I don't know typically where I lie and how I, let's say, talk about things. I have no idea. Like, I would get skeptical even if I have no means to say anything with any misinformation. Who are they to judge what's misinformation or what's not? The numbers make sense, but do the fundamentals reflect that? This is a gray territory for me personally. What are your thoughts about it? And if you want to get your hands on this software, folks, like I said, go to leodileo.com, free to sign up. You'll be invited to the Discord group, and there we have a bunch. We're just starting to grow it now, so you'll find me as well as other YouTubers and other investors that are in there talking about stocks left, right, and center, as well as other things to talk about. But we're always just going to be chatting about how we can do analysis better and how we can find undervalued great businesses at fair prices. So in my software here, if you haven't seen any of my other videos, we have access to the income statements, we have access to the cash flow statements, and everything dates back 10 years. We'll go 10 years, as well as the balance sheets, as well as we have a charts section. So if you want to look at things visually, you can see everything visually. So the revenue, the net income, free cash flow, how their free cash flow compares against their earnings per share. These are all different metrics that you can utilize when researching any stock you would like across any market, from the US, Toronto Stock Exchange, Euronext market, to have one up on your investing process. That's my little notification saying that this video should be done. But that is the video, folks. Take a look at the software, leodileo.com, and yeah, 7-day free trial. But yeah, final thoughts: PayPal, undervalued, but questionable based off its fundamentals on their policies. Anyways, folks, that's the video. If you liked it, you know what to do. I'll stop talking and check out these other videos up here.